Welcome back to Switzer on Sky News Money. Well, I always like to talk to Anton Tagliaferro, the founder of Investors Mutual, whenever it comes to trying to analyse the companies that should be liked or disliked. And reporting season is a time when someone like Anton gets a chance to run his rule over some pretty important companies. So he joins us from our Sydney studio. Thanks for coming on the program, Anton. Good to be here, Pete. All right, so reporting season so far, is there any company that you've seen the report and you said to yourself, gee, I quite like this company?
Look, there are a lot of results coming up, Pete. It's hard to absorb them. You know, today we had several companies reporting. We had CSL, which was a good result, and you know, guiding for better earnings next year. We had Sonic Healthcare, which was a good result. Westfield actually was okay. Woodside was okay. Origin was okay. So actually, most of the results today were fairly good. Yeah, and we had CBA last week. Obviously, that was overshadowed, I guess, a bit by the other stuff going on. And tomorrow we've got Westfield and Telstra, so there's lots going on. But it gives you a good insight into which industries, what's going on. So.
Okay, well, let me pick a few of those out. Let's take CBA, and I asked the same question of ST Wong earlier in the program, and I said there's a lot going on around CBA. We know they've increased their dividend, but my question to you is, do you suspect that they will overcome a lot of this noise, and you know, it's quite troublesome noise at this point in time, and that their earnings will actually win through in the end?
Yeah, Pete, look, I think the CBA is a massive bank, and obviously what's happened is regrettable, you know, but it's not, in the overall scheme of things, it's a very small percentage of their overall transactions. Look, there was obviously a failure in these ATMs to report transactions over 10,000. You know, the number of suspicious transactions you're talking about is about 1,000 maximum, so it's, you know, I think it's got to be brought into perspective. I think the whole thing's been a bit blown out of perspective. Obviously, they're going to have to spend a bit more money on compliance costs. Clearly, you know, the CEO's leaving a bit early to you know, because of what's happened. So I think they've taken a lot of remedial action. But overall, you know, the CBA remains a very strong bank.
In your long time doing fund management, Anton, have you ever raised question marks over a board? And if so, would you raise question marks over the CBA board?
Again, Pete, I think it's being really blown into, you know, out of perspective. You know, obviously the thing's going to go to court. If you read some of the things that's happened, actually CBA was trying to report to the Austrac, whatever they're called, and you know, in fact, Austrac said you're reporting too much. We can't cope with all the information. So look, it's clearly there's been a failure at the CBA in terms of an internal control. Clearly, the IT linked to those ATMs, there was a lapse. But in the overall scheme of things, you know, the CBA is a bank with $1 trillion in loans. You know, 50,000 employees. It makes almost $10 billion a year. So look, we are really talking about a very, very insignificant part of you know, of the overall transactions of the bank. So I don't think it's really, while it's you know, sells newspapers, it's great headlines. I think it'll blow over time.
Okay.
It's serious, but not that bad.
We'll report that as nothing to see here. Move on. Let's move on to Westfield, and it's a company that's, you know, obviously been affected by the so-called Amazon threat. Do you think Westfield's a buy at these levels? Look,
we have been buying some actually recently, Pete, at 750, 760. Look, there's no doubt Westfield has the best shopping centres here in Australia. It's got some of the best centres in the US, great centres in the UK, building one in Italy. You know, it's obviously got the best shopping centres. Obviously, retail's being impacted by the move to online. But, you know, as Westfield's results show today, they're still growing their rents, you know. And look, while there will be an impact on many, I think, secondary shopping centres, less quality shopping centres, I think Westfield will always remain a destination. And, you know, there is the possibility that as retailers decide they've got to be in the prime sites, that Westfield will actually get more demand over time as some of those secondary sites disappear. So look, it's a bit. It is being. There is the you know, a bit of caution because of the online, but I think that, you know, the centres are, you know, prime centres. They can't be replaced, and at these levels, yeah, look, we're happy to own them.
How about a company like Seek?
Yeah, look, it's expensive. We don't own it. The result today was a bit soft, as from what I understand. Some of the accounting's a bit funny in terms of they're putting loss makers below the line and profit makers above the line. So it's not one we've owned or looked at for a long time. But you know, clearly, if it comes off, you know, it's got obviously again a great position in the employment market, advertising market, which is obviously cyclical as well. One's got to be aware of that. But you know, it's okay, but not at these prices.
Okay. Has there been a company that has reported over the past 2 weeks where you might have owned it, you said, I'm getting out of it, or you might have been thinking about going into it and you said, no, that I'm not going into that?
No, there hasn't been. I mean, I think there have been a couple of disappointing ones which we've owned, you know. One is Pact, which reported today, a packaging company, which is still, you know, doing some very good things in terms of its expansion, but it's organic. So it's going into things like pallet pooling and contract manufacturing, and those areas are growing well. But obviously its core business, which is rigids plastics packaging, there's a bit more competition in that area. So that was a bit disappointing, but I think the story still holds. It's going to take a bit longer, but you know, the other one that's been disappointing has been Main Pharma, which again is a good company, but obviously generics in the US is more competitive than the company and ourselves, you know, envisaged. But again, there are other divisions of the company, such as the contract manufacturing, the servicing, which are growing. So it's okay, I think. We're still holding them. We haven't added to them yet because we still want to see the companies. They still have to come through the office, actually. One of them's coming through this week, and then we'll decide from there. But I think the story's still right. It's just, you know, a disappointing half, really, that they've had.
Yeah, well, certainly because Main Pharma has been a star performer when we look at the stocks. Yeah, no, I'm saying the stocks haven't been doing well, particularly when we do the final count with Carson Scott and Helen Daly. Main Pharma has shown up many times over the past few months as a poor performer. But beneath it, you're saying to us it's still a quality company that you think possibly has a potential to make a comeback.
Yes, look, the generics, as I said, the generics business in the US is tougher than envisaged. There's a bit more competition, there's less distributors. But Main Pharma has more than just generics, you know. It has two other divisions, and those other two divisions are both growing. They've got branded products and contract manufacturing, which are growing, and they'll contribute in future years. And as I said, we've yet to understand whether the downturn in the generics margins, you know, whether that's ongoing or when that will recover. But, you know, at current levels, you know, we're happy to hold them. We just have to understand how far away any recovery is before we decide whether to buy any more or not.
Quickly, Anton, Telstra tomorrow. Yeah. Are you still holding Telstra, and are you expecting anything that could drive the share price down?
Look, Pete, yes, we do hold Telstra as many as we used to many years ago. We were actually buying some around the $4.10. Recently, they've jumped a little bit. I think, obviously, the biggest news tomorrow is going to be the dividend from Telstra. The earnings, look, will be fairly flattish, I think. Again, you know, very competitive in mobile, etc. MBM payments coming through. The focus is going to be on the dividends. I think tomorrow Telstra will probably maintain its final dividend, but I think everybody will be looking to the guidance where the dividends are going in the next few years, because, you know, post 2019, post 2020, when the NBN is rolled out, Telstra's fixed line revenues will fall, and the company will have to address its dividend at some point in time. Although it has strategies to offset some of the loss in revenue from the fixed line. So we'll get an update on that tomorrow. But I think that everyone's going to be focusing on the dividend, so we'll see.
Without a doubt, without a doubt. Mate, thanks for joining us.
Pleasure. Thanks, Pete.
Anton Tagliaferro from Investors Mutual. Now,